So thanks everyone for joining us today for Crypto 2030. And our focus is going to be on liquid investments. We're going to be looking at the token investment side, and we're going to be doing some comparisons with the traditional side. And we're going to be looking at a number of different questions around liquidity. Now, to kick things off, I'm going to start by making sure that you all understand a little bit behind our panelists and the companies that they represent, because we have three very different companies being represented today on stage. So what I would like to do is, Abdul, I'd love to kick off with you. If you could tell us a little bit about your company and what problem you solve and for whom.
Yeah, thank you very much once again for having me, and thank you very much to Jennifer again to accommodate me online. Unfortunately, I was not able to travel. So yeah, I mean, Zignaly, my name is Abdul Rafay. I'm the co-founder and CFO at Zignaly. Zignaly is one of the leading social trading platforms for cryptocurrencies. It allows the retail investors to basically invest in the crypto market with the top leading fund managers in the world. The problem that we are basically trying to solve is the same problem that the retail investors see in the world of investments. That the best opportunities are only available to the elites of the world, and people from the emerging markets, high inflation country with the small budgets are not able to really get into the greater opportunities. So we saw the same thing in the world of fund management into the cryptocurrencies, that there were very few names who were doing it back in 2017 and 2018, the active fund management, and the entry was not easy. So what we started as a platform is a two-sided platform that we started onboarding traders. It was a very difficult process. It took a few years, but now we have like really amazing, one of the leading traders in the world on our platform. And we have provided the technology using which basically people can invest and kind of copy trade those fund managers in an absolute exact manner with as low as $1. So no entry fees. The platform is free to use, no charge to entry, zero subscription fees, and you just pay on the success fee on the profit that you make. And as a technology provider, you make sure that all the accounting and everything is done. So fundamentally, the main idea here is that the best fund managers in the world are getting the seamless fund management suite there, both in terms of accounting, client management, fund management, and the investors are able to invest in a single click of a button into the trader that they like.
Thank you, Abdul. I'd just like to follow on from what you just said. You've had a traditional background and you've now come over into the digital sort of blockchain space. Could you tell us a little bit about your traditional background and what was the idea between, of coming up with Zignaly?
Sure, absolutely. So basically, I was a finance graduate back in 2010, and I was getting things done like CFA and everything. And I started, I joined banking industry working with one of the premium European banks in Middle East, back in the day. But, I'm not going to say that banking is blah, blah, blah. It's just that, I realized that there is better potential in terms of where I see my vision. So I always believed in bringing financial independence to the masses. Okay. And I did not see that happening in the world of banking. So it's not that I wanted to do something else. It's just I wanted to do something very specific like that. So when I started getting introduced to Bitcoin and cryptocurrencies in 2013, it was very intriguing. And I started investing into it myself, and I saw that this is like a permissionless world. And by 2016, I was 100% confirmed that this is the path that I want to take. So I left my banking job, moved full-time into crypto, more into investment and operations, and basically co-founded this Zignaly with a couple of my Spanish friends, and we started Zignaly in 2017. Interestingly, one of the co-founders that I have, he's a hardcore developer. He knows nothing about trading, right? And he was, at the time when we started talking, he was actually automating some of the Telegram signals, some of the signal groups. So he was trying to automate that. And I was like, this is a whole new market that we are talking about. So I have the financial knowledge, the trading knowledge, the investment knowledge, and you have the dev and tech knowledge. So let's build something up. And this is how we started. And I think over the years, we can basically proudly say that we have one of the best technologies when it comes to social investment and copy trading in the industry.
Thank you, Abdul. Now, you've managed to find a niche. You followed your values, wanting to, give access to more people to finance. So you've seized that particular opportunity with creating the platform of Zignaly. Now, I'd like to move over to Alex. What opportunities did you see? Tell us a little bit about yourself from traditional background and how you sort of moved in and what problem your company is solving.
Sure. Hi, everybody. Alex, general partner at Verda Ventures. We invest in tokenized infrastructure. And our kind of key differentiation is that we work directly with blockchains, either layer 1 or layer 2, and distribution channels like browsers to provide kind of a holistic value add to portfolio companies. I started my career at Goldman Sachs and JP Morgan and was pretty quickly discouraged by what I think was like very inefficient and legacy technology. And there were like, a few data points that really like stuck with me. But the key insight that I had at the time was, why can't sending money or sending value be as easy as sending an email? And it was particularly tough for me as a millennial because it was like, wait, I can send like an email or a message to anybody instantly. They receive it instantly. If I send a Swift wire transfer to somebody, to my friend in South America, why does it cost $30 and take 3 days? And sometimes it messes up. Or, why does settlement of equities take 2 days? Why can't that be instant settlement? And so when I read the Ethereum white paper, I was like, wait a second, there's a huge potential unlock where we should be able to achieve instant settlement. So kind of fast forward, I ended up selling a mobile wallet company that I co-founded. I was CFO at the Cello Foundation and have been really about unlocking that financial access and enabling that instant settlement so that anybody in the world can send money for a fraction of a payment within a second or with one block finality, just knowing somebody's phone number. So that's kind of the key insight and North Star that we've been moving towards.
And tell us a little bit more about Verda Ventures. How does that mobile concern come into play? How did you move to Verda Ventures?
Yeah, so Verda Ventures originally spun out of the Cello ecosystem, and we basically work with distribution channels like the Opera browser. Opera, for those who don't know, it's a Nasdaq listed company. It has over 150 million monthly active users, and they now launched a wallet called MiniPay. Launched in September, now has over a million monthly active users within 4 months, growing at over 50,000 users a week. And it basically is inserted into the browser. And the browser comes pre-installed on many phones in Africa and emerging markets where Opera's has the most market share. And so we have this kind of built-in distribution system. And the surprising thing is, they're like, many of the end users have a mobile phone, but don't necessarily have a proper sanitary system. So it's really incredible to see that, people that don't necessarily have, a running water can send money to their friends just knowing their phone number. And in Africa, that's a particularly large unlock for liquidity because they have 54 countries. So they're able to basically send money to anybody in Africa or around the world, just knowing their phone number for a fraction of a penny. And with Cello, we take advantage of a lot of those primitives that I would say unlock convenience. and liquidity. One is what I mentioned, like the phone number mapping, so public key address to phone number mapping. And another would be being able to pay gas fees in the native stablecoin. So, instead of needing to have ETH to pay the gas fee to transfer your USDC, you can just transfer the USDC or USDT. And so that basically enables people to say, instead of needing to know public-private key cryptography, instead of needing to know what a gas fee is, instead of needing to know what layer 1, layer 2 is, you open up your browser that's pre-installed on your phone, and you are able to send money to your friend in a different country, just knowing their phone number. It's a fraction of a penny, and you have access to a $1 savings account. So now we're supporting liquidity of those projects, and we're also investing in the applications building on top of that distribution channel.
But you also mentioned earlier to me that this sort of ties in with tokenization and private credit. These are other areas that you're focusing on as well, and I believe we will come to these later when we start talking about real deals coming up further in our panel. Now that's very interesting. So we have Abdul, who's providing a platform to allow retail access to trading through top traders. You're involved in the infrastructure layer and making the connections into projects and investments at the deeper tech level. Now, Brendan, you do something a little bit different at NodeGate. You're less around the tech and more around the person and the people. Tell us a little bit more about yourself and NodeGate and how you, like the others, come from a traditional background, but you come in with a legal and a tech view. So
yeah, exactly.
Yeah.
Hi everyone. Thank you for having me today. So I'm Brendan. I'm the co-founder of NodeGate. So NodeGate is a capital raising advisory and investment partnership focused on Web3. It's quite a recent business venture because we created in last year actually, and we are based in Zug in Switzerland. And also quickly about what we are doing. Our vision is to be the go-to partner actually for those who have and those who need funds in the Web3. So basically, we are providing capital advisory to founders and then investment deal flow to investors. And we're making as well investor and funding connectivity platform. And so quickly about my background, as you mentioned, I have a legal and technical background. So I start my career in the international law firm in corporate law, and back to 2016, I was quite interested when I discovered about Ethereum. So as a legal advisor, I was quite interested about the legal implication of smart contracts. So I identify at this time like a new business opportunity for law firms to generate revenue by selling specific services related to corporate interest in building use case and using the blockchain technology. So at this time, it was very in the early stage. It was mostly about supply chain. And so I created this blockchain practice in 2016 for this international law firm. And then after, I've been involved mostly in the Ethereum community because I want to go deeper into the tech, I would say. So back to 2016, participated a lot of conferences as well. I've been part of the Ethereum Foundation. So it was a great way actually to have a direct interaction with prominent entrepreneurs at this time. And so how they worked to better understand the technology and what the add value they can bring actually to the market. So basically I was advising some of them how they can generate revenue and when it's come to go to market as well. And recently I live in different countries, in Singapore as well, South America, in Asia, and now I'm based in Switzerland. And to me, it was a great opportunity move there to build the bridge between the traditional finance and DeFi because of the institutional interest in the digital assets. So Switzerland was a great place for that, and especially when it comes to investors in this area. There are a lot of promising founders based in the crypto valleys too. So to me, it was great to found this new company in Zug because, as you mentioned, everything is about human relationship. So we are very close to the founders and the investor. Every week we interact with a dozen of them, and to better understand their business and the interest, how we can create, liquidity on the market. And because two of the both actors, they make digital asset space more attractive, and so everything is about passion, and you believe in this technology because that's bring add value, and I'm quite confident about that. It's not about speculation, and it's more about the add value you can bring to the market. So I'm still working on this, and it's a very fascinating space to be here.
Thank you, Brendan. So now you just mentioned, just to tie up, that it's very much around the human outreach, and that although the work that you do with sort of matchmaking money with projects, and you're focusing on the quality of the project, that has a more of an indirect effect to the liquidity, I would say. Now, I'd like to switch over then to Abdul. Around the work that you do you have a direct implication to liquidity in the work that you do?
Well, Zignaly, not direct, but it's definitely an indirect line of work where we have the liquidity. So basically, over the years, we have gathered more than 500,000 people from around the world who invest in the fund managers, right? So this is also an active liquidity, right? And then there are two ways to think about it. Number one, we are kind of pooling it up to provide it to the larger fund managers who are basically then the market actors, right? And they are making sure that there are right investments being done. But on the other hand, if you think about it from a risk perspective, that we are ensuring that we are finding the best fund managers so that the money that is handled is over the time increasing and not decreasing for the investors. So they are also able to invest more and more. And the whatever because we are into direct trading business, right? It's direct trading of the coins. So it adds kind of liquidity to the order books in an indirect manner. So it's not that we are doing some direct provision for adding liquidity into the books, but I think through our marketing campaigns and through adding more and more investors and showcasing that how amazing our fund managers are in a greater scheme of things, more and more people are joining our platform, and more AUMs are joining these deployable liquidity in the market.
So Abdul, I think one of the keys that you mentioned before was that over the years, you have really great traders who, which will allow that social trading to take place. How do you vet those traders to ensure that the traders today are continuously good? Can you tell me something?
Yeah.
I think you've got this special Z score. Tell us something about that.
Absolutely. Yeah. I mean, it's I don't want to get into too much details around it, but basically, initially what we have done is that we created a method. So we learned a lot from 2020 and 2021 market when we saw a lot of volatility and we saw a lot of bad traders getting liquidated. And that was a lesson to us that, no matter how many customers we acquire, if we do not have the best traders in the space, customers will churn, and it takes a lot of effort and cost to bring in the users. So at that point in time, we made it really good, like a mechanism, and there are some parameters that they have to provide as a trading history. We do a Satoshi test on them, and then they have to come in and trade on our platform for a few months before they can even enter the marketplace, So they can come in, they can create their fund management service, they can market it to the private channels all they want, but to come to our Zignaly's marketplace, they have to go through a testing period, number one. And number two, then last year we started using the AI technology. We brought out something called Z-Score, which is a mix of thousands of data points, which are kind of proprietary data pointers for us, as we have been accumulating trade data for more than 5 years of over 25 million trades by thousands of traders on our platform. Using that plus some macro signals and micro signals, we have created something called Z-score, and every trader is ranked according to it. And the top traders are the ones who are allowed in the marketplace, and they are the ones that we promote some way on our platform. So we have kind of created a mechanism, and we are very proud to say that, for more than a year now, despite the market volatility and everything else, we haven't had a single liquidation of a service of fund manager in the marketplace, which I think is something very important. And we have thousands of applications every quarter coming in for people to become fund manager on our platform, but we are very selective and we pick a few dozen maybe. So even right now, like, we are always in the process of cutting out the old traders, bringing in the new one, making sure that the current ones are at the absolute top game, and we are going to make it even more strict by always tightening up the mechanism, because ultimately traders respect that we are also making sure that they are good, so that the money that is getting invested in them is also safe and secure.
Excellent. So it's not just about the idea of the projects that are interesting for investors, but it's also the quality of the deal, right? And I
Absolutely.
think that's a great segue into asking Alex the same question about what the products and services that you're working with and offering at Verda Ventures. How did they improve the liquidity in the crypto digital assets market?
Yeah, so fundamentally, we're first looking at, like, does this solve a pain point? Because if it doesn't solve a pain point, there's not going to be organic demand, either for your product or service, or by extension, your token. There can be, so in any given point in time, like, a token's liquidity as well as its price is largely derived from, like, two individual components. One is a speculative component, which generally drives a lot of behavior in the short term. And then one is more of like a value, what's your value add component? So if you have a core value proposition that solves a core pain point, you're naturally going to have demand, and that demand is going to lead to what I'd call organic buyers and sellers. So we are looking for the projects that solve those core pain points, and then also helping them with their initial liquidity needs. So we're looking at, okay, what core problem does this solve? And then once we've identified what we think is a killer app, we, of course, layer in the distribution channel and the technical infrastructure support, but we also provide them initial on-chain liquidity, such as through Uniswap. And we also partner with market makers so that those buyers and sellers can come, but also their trades clear at very good prices with limited slippage. If you don't have any buyers or sellers, if you're not solving a core problem, you just are helping make a liquidity. You have a deep order book, but nobody's coming to actually use that order book. So we see it as the core of a long-term sustainable liquid market starts with a quality real deal.
And I think, that's one of the key things that we're going to be talking around is these quality real deals, because, no point having volume that's just on the speculative side when it comes to sustainable, long-term and deeper markets. Now, I'm wondering, since you were just talking about, improving liquidity and not just having a book, you're going to need a bigger marketplace. Who would be your competitors? Who do you see as being your competitors, and how does that affect the liquidity?
I mean, I think I don't even know if competitors is the right word, because for you to have a market, you need to have buyers and sellers, which fundamentally means you need to have people who disagree with one another. Like, for me to be willing to sell, I don't know, Bitcoin at the current price, like, somebody needs to disagree with me that, no, I want to buy it because I think it's going up. So, I mean, I really think that, quote unquote competition is kind of critical to any functioning market. I mean, I don't even know if, I think there should be a better word for it than competition. But yeah, coming together of buyers and sellers is fundamentally based off of people with different expectations, and that's what enables liquid markets.
Abdul, thank you for that, because Abdul, I know you have quite a view on, what you would define as competitors. I don't think you see it that way either.
Yeah, of course. I mean, like, it's you need competition sometimes, a good competition, so you can always benchmark higher and strive for higher. In our line of businesses, definitely we have competition. We do not really see a lot of scalable competition inside the cryptocurrencies, but we have it from outside. So we have players like eToro, DarwinX, MetaTraders, Spam accounts. They are the competition for us. And recently we have seen that a lot of exchanges are trying their bet on copy trading as a way to gain the next wave of customer. Just to showing that there are fund managers out there and you can just simply copy trade. There's a lot of fundamental problem around it, the way the most crypto businesses are doing. But competition is necessary, because if you have them, you strive for better. Now, in terms of liquidity, particularly, copy trading is good because you are driving concentrated pool of liquidity towards one action. Okay, so automatically, either be on the buy side or on the sell side, you are letting certain number of expert govern where the money is moving. Okay, so I mean, like, it can be manipulated, yes, of course, and that is a very important part of vetting your fund managers, be it us or be it any other copy trading platform or any other exchange. They should be very careful about it, that you are not onboarding manipulators who are playing with the people's money. But this I think adds a lot of liquidity in the market, and as I said before, if this is profitable, this will deepen the pockets, and people might be able to even start thinking of crypto as something that where they can even invest the money that they used to invest only in fundamental stocks and stuff like that, where if they can see a certain consistent yield coming out of fund management, then even the larger money can come in, and which will obviously help the industry.
Thank you. And Brendan, in NodeGate, I know it's a bit different because these gentlemen, Brendan and Abdul and Alex have just sort of mentioned in a very different way because it's more around the trading. But in the corporate advisory, where you are in helping, find money flow to the right projects, is there much competition, or is there an open space here that?
As well, yeah, open space. Actually, obviously, we have competition. I think that was three types of competitors. The first one are a kind of agency, so they can support some founders in the capital raising by proposing a generic template in pitch deck or some strategic documentation. But still, I mean, they cannot provide for a partnership for the long term. Then after we have obviously another level investment banks like Rothschild, but is not at all, I mean, for the same investment ticket size, because they invest in more and more and important projects. But they don't have actually the crypto knowledge. And then after, the first type of competitor could be kind of finder. So individual people, they just call their contact and they say, hey, can you invest in this project? And they take a commission of that. So actually all these competitors, they can help in a specific way. But what we do at NodeGate is quite different because we act as a partner. We provide at the same time, personalized support. So, for example, we have two different kind of clients and type of entrepreneur. We have the entrepreneur who are already experienced. They already raised funds in the past. So for them, we create like specific modules. For example, introduction to investors. So basically, they want to raise funds in the next 2 months. So we can already interact with the investor we know very well and to select the right one. And then after, for all-in-one, I would say, package for the founders who just create for the first time their startup, they really want to focus on the product development of their project and the business development, and they want to outsource, the capital raising process. And for that, we act as a partner. So we support them for the long term, between 6 and 9 months, and we are doing like creating the pitch deck, we're creating the capital raising strategy and all the documents, business plan as well. Yeah, so it's not like one pan of the project. Is we are a real partner and for the long term, and we need to be sure that the project is ready when we present it to the investor, to optimize the chance to raise funds actually. And it's very important. It's not just I will help you in this specific area and let you alone doing your stuff. So that's the reason we like to call ourselves like a mostly partner. Yeah. And it's the same, when we introduce to some investors. Obviously, there's investors that just want to give some money to this project. But for us, it's as well as important as well to introduce them to strategic investors as well, and they can support them as a mentor as well for the business, and that's very important and add a lot of value to the project. Yeah.
So the key is, long-term strategy and really supporting both the project and the investor side for the long run. I think that's so it's a bit of a niche that you're sort of filling, which I'm sure that there's folks in the audience or elsewhere that certainly needs that, because not everyone knows how to get funding and in a strategic way and find good partners. And I think partnership and strategy is something we're touching on in the questions that are coming. So the perspectives that we've been talking about is moving. We have been speaking around project or the investor perspective. I'd like to move on and actually now stepping into looking at the perspectives between the difference between token investments versus traditional investments. What's the difference? What's similar? If we can start with you, Alex,
Sure.
that would be great. What's your view?
Yeah, I mean, firstly, when you say traditional investments, you mean like equity-based investments?
Traditional finance.
Okay, cool. Yeah, I mean, I think like one thing that sometimes trips people up on like token-based investments versus traditional investments is like, because token investments are newer, a lot of your rights are not as clearly defined. So, for example, if you invest in the equity of a Delaware C Corp, you know your rights as a shareholder. And if there is a dispute, there's a clear process by which shareholders' rights are resolved. But in the case of tokens, if you buy a token, you do not necessarily have guarantees on what those rights are, and need to be extra certain that, one, you understand, okay, what am I getting when I buy this token? Of course, if you're just buying a meme token, that's also good. That's also cool. But you need to understand what it, and then if things go wrong, like what kind of recourse do I have? Like what can I do about it? So that's just on kind of one area where I see people get tripped up early is they assume that when they invest or buy a token, that they have the same rights as when they buy or invest in a traditional financial instrument, and that's actually not the case. But sort of in terms of the features, tokenized investment products provide a lot of advantages around liquidity in particular. I mean, with for example, Uniswap, you can create a market for your token within like 10 seconds. You deposit liquidity in, let's call it a stablecoin, USDC or USDT, and then you deposit a liquidity for your token, and you've just suddenly created a market with two-sided liquidity, and people can come and buy and sell. And that's a pretty incredible advancement in efficiency, because previously, like, to get secondary market trading, it can be in some cases, if it's trading on like a large stock exchange and millions of dollars to get to that point. So I think tokenization has made it much easier to get liquidity from a very early point in time. So I think it comes with risks, but it also fundamentally advances the efficiency of finding liquid markets and clearing prices.
That's very insightful. So now the magic word risk has come up. And that's a favorite of mine, being a risk manager. I'm wondering, Abdul, your perspective between the token investment world versus the traditional investment world. I'd love to have your view on that, because you deal with that quite intensively.
Yeah, absolutely. I agree that the tokenization has made it a lot easier. Obviously, we have to think about the bad elements, that how they are exploiting this functionality of the liquidity being available just simply in 10 seconds. That has both parts to it. But let's talk about the ease of the founders coming into Web3 and trying to raise money just by being, it's not that it's not available in the equity market or in the traditional market. There are ways, like, there are Kickstarters, and there are, decentralized P2P kind of fundraising tools, but nothing is as easy. Like, we have been through that journey, but nothing is as easy as we have seen on Web3. Like, if you have a great idea, you can go to the market with like minimalistic kind of a marketing budget and some right tactics. You can raise a decent amount by providing liquidity and looping in the right people. I would say that the currently raising money in Web3 is relatively easier as compared to the traditional world, and it has been the case for last 1 year or so, because the traditional finance is driven a lot by the institutions. Okay, the money is driven by the institutions, whereas in the world of Web3 and in the crypto industry, there's a large set of retail investors. So for last 1 year, you might not have heard a lot about Paradigm or Anderson Horowitz or Sequoia investing in a lot of Web3 companies. You would not hear that, but there are still projects out there who were able to go and do some fair launches and some IDOs and IEOs and still get a couple of $1 million here and there, doing some OTC rounds, some KO allocation and stuff like that, and they are able to raise money. You do not get that easy in the traditional market. I'm advisor to some companies on the traditional side. They've all faced a very, very strict and very, very congested scenario in the last 1 year or so. So I think yes, it brings a lot of risk in Web3 when you are simply allowing people to put up a liquidity, do some marketing, and get the funds out from retail. It brings risk, but for the good founders and people with the right skill set in place, I think this is a great flexibility. And I think over the years we will also see a lot of traditional people trying to use this route to get better and faster and even better terms in terms of getting liquidity or fundraising, basically.
Thank you very much for that perspective. And I'd like to just continue on with those perspectives again on liquid investments versus less liquid. I'd like to turn and start to talk around more about what the differences, you see about, exchange traded versus OTC trading. There's benefits and negatives to both. I'd like to start first with Brendan, because you're at the sort of seat of things and matching projects to capital, and you probably see, where there's benefits of having something more liquid for your clients or more OTC. What's your view on at NodeGate on the benefits or the disadvantages of either side?
Yeah, sure. No, so but basically, in the OTC, what I can notice is that it's quite a close place and a lot of friction when it comes to investment and the exchanges in comparison. They can generate much more volume, and it's easier for investor because it's a listing, it's clear, and sometimes there's a prospectus, even from token list, most service project. So it's bring clarity to the investor. He can review the prospectus. So I think it's bring more liquidity in such places. But I can because I can speak about what I know better. I can see a specific marketplace now from a startup. So, for example, tokenization of bonds. It's a new way for startup to get money and to focus about their project, and they create a kind of marketplace that can link so the startup with the investors. And so all the challenge here is to bring liquidity to this marketplace to convince traditional investor or institutional ones to bring liquidity to this marketplace, and to generate like a dozen or even more million of transaction. But it's very challenging. But now I think that especially in the Web3 space now, they're aware that they need to provide a kind of let's say a security, a more transparency when it's come to the evaluate the token project. So for example, you have the startup, they focus on giving a criteria about the seriousness of the project, and it has been certified as well. And when it's come to the audit of smart contract with behind, so now you can see kind of prospectus with all the details, and it has been approved by an external provider, and then it's make the investor more confident, is bring more trust actually to invest in such a platform. So in exchanges like Coinbase, obviously they're very reputable and they're well established, and for their own reputation they have to deliver such document and to only to list the trust token now, because they cannot afford to list like a scam token. So that's what I can see. But that's the reason I was mostly focused about the third marketplace, because we can see a rise of such a new marketplace, generate a lot of volume transaction. So yeah, that's what I can see. Yeah.
So Alex or Abdul, what's your take on OTC versus exchange traded? I mean, there's benefits to both. I mean, I think maybe, if you want to just take a stab, Alex, how do you see, I mean, OTC is not all bad. There's raison d'etre for both markets.
So I've been on both sides of many OTC trades, and my primary reason for entering an OTC trade is usually one of a couple things. Number one, I'm worried about slippage. So if I go to an open market and let's say it's a relatively illiquid asset or token, and I could potentially have significant slippage if it's illiquid, right? If I want to clear $1 million and the 24-hour trading volume's like $500,000, you could see over 5% slippage easily, right? So that's one. And then another reason oftentimes I'll enter in those deals are related to privacy. So like you don't always want the whole world seeing what you're doing. Particularly if you're doing on-chain trading, it's like, it's not anonymous, it's just pseudonymous. So OTC provides a level of privacy that you won't find if you're openly trading. And there's people whose full-time jobs it is to like track what others are doing. I know, and Abdul partially makes a business off this, being able to like track what other traders are doing. But oftentimes I don't want other people to know what they're doing. And the bigger the sizes you're doing, the more obvious it is who you are. Yeah. If you're a very large trader, like there's probably maybe in a particular asset, there's oftentimes only a handful of people who are doing that. And of course, you could like go through what you might call a VWAP or a TWAP on a secondary market, where you're kind of executing trades over time via a time weighted or volume weighted, but it's still usually somewhat obvious who's doing what. And so OTC additionally provides the advantage of discretion and privacy that you're not going to get in a liquid market. So previously do it. The one caveat I would say is to ideally work with a reputable OTC desk. If you're directly dealing with the counterparty, there's sometimes significant counterparty risk. So that just where you can go through a great OTC desk to reduce the potential counterparty risk.
So counterparty risk, KYC or KYB, Abdul, when it comes to your world, for liquid versus OTC, what's your perspective on that? In terms,
very interesting, very very interesting. So let me present it from both perspectives, right?
Yeah.
So I have a project Zignaly. It has a token of its own, Zigcoin, right? It's a decently traded coin. It has a couple of $1 million trading volume every day. It's on decent exchanges. I'm happy, right? If I think of as a project, OTC attracts me if it brings me some value. Okay, like if someone coming in from a strategic intention with a certain vesting period that, okay, I want to get your coins and in the against I will provide you XYZ value that you cannot buy otherwise. Then as a project, it's interesting for me, right? Otherwise, if I'm well capitalized and if I'm not looking to build my dollar-based treasury, then OTC, it's not the perfect solution for me. But then if I think as an investor, which I do sometimes, right? I run a small fund as well. And Zignaly, in fact, runs a small fund on the side where we find interesting projects. And, we did a lot of that in the bear market. This is one of the ways that we build our treasury, is by allocating some good funds into some really good projects at the level where we found interesting. At that point in time, projects had no way to liquidate, because they were lower market caps, they were under 20 mil. There was not much liquidity in the market, and they knew that if they try to sell their tokens to meet their expenses, they are going to crash. Okay, and to be honest, we found that as an opportunity, and we entered into some interesting elements where we said, okay, let's do some co-partnerships, some co-branding, some co-marketing, and we let's do ecosystem supports, and we entered into some agreement OTC deals where we got some discounts, but we also took vesting as well. So it was not like you just give us your token, so next time your price hikes, we sell you. No, not like that. So it was more like an investment agreement / OTC. As an investor, I would like more deeper discount, less vesting, and more liquidity, right? So it depends from whose perspective you are talking about.
Exactly.
From a project perspective, as a project, if I am liquid enough, if I don't see a value from an OTC deal in terms of what they can add beyond the dollars that they are giving me, I would not do the OTC. But as an investor perspective, if I see a good project, if I see an opportunity, I'll go for it. So it's wearing a different hat at different point in time.
And now you mentioned something, it depends, right? So here's one on it depends. Lockup investments. So there's some smiles. There's benefits and disadvantages, again, there's impacts on tokens. Now, there's also the view that, some of the investors are pleased where there is some lockup because they don't want, the founding team to sort of just sell all and, and run. So what's the view on lockup investments in terms of liquidity, but looking at it from both sides, right? From an investor as well as from the project side. Project side obviously wants to get some cash out. Investors want to see some, value rising. How have you seen things in your world, Alex?
Yeah, so when I was CFO at the Cello Foundation, we almost mandated kind of lockups. And the reason was we wanted to closely align interests of the investors and the projects. And in return, in some cases, we would give some % discount to the market rate. But our primary motivation was to align interests over a somewhat extended period of time. So in many cases, for example, it was like 24 months. In some cases, it was 36 months. But in all cases, the idea was being, okay, put aside did the token go up 50% today? Because from the project's perspective, we're trying to build something of value. And the day-to-day market, changes do not contribute to the long-term value accrual. So we wanted to keep people focused on that long-term North Star and less focused on kind of day-to-day fluctuations. So for us, at the project side, the lockup was extremely valuable. And then, also kind of from the investor side, which I'm also on, it's good to know that the founders are also locked up. So, you don't want to be in a situation where you're buying something just so that the founders or core people can sell into it. So I always look for, okay, is my lockup time similar or shorter than the core founding teams? And that's like another important way for me to align interests. And I think taking a step back, if you think about, what is one of the most unique things about tokens, it's really an incentive system. One of the most unique things is this incentive system to easily align interests, right? When you hold a token, you hold a small stake in the future of something, and that lockup makes sure that your stake is in the long-term interest versus the short-term interest.
That's a wonderful view of both sides of that coin. Would you have anything else, Abdul, to add, or Brandon?
Yeah. I mean, again, it's a very interesting topic, and interestingly, I see both sides of the stories on that as an investor and as a project as well. So for community, lockups are extremely important, especially of the founding tokens. I completely agree with a friend here that it's very important that the founding team is logged in. When we launched our project back in 2021, initially our plan was that we will lock it up for the founders ourselves basically for 6 months, and we will do like a 30 months linear vesting. But then over the time, we realized that it would not work out. We have to do it much more long term. And, over the years, we extended it by 3-4 more years. And then again, recently extended it for more years, because we as founders, we also, felt that if we are not logged in, even if we are not selling, community will not get the vibe. They need to understand that our incentive as project founders is completely logged in, and investors need to see the same. Okay, if they see that the founders at one point in time have flexibility to sell, then anything can happen. Even if I don't sell, maybe some other founder will sell or someone else will sell. So there has to be a long-term lock. However, there has to be some flexibility around the treasury tokens, because sometimes some irrational and unproportionate price actions do come in at times, and it is important for the treasury managers to have the right mindset to take some advantage out of it for both perspectives, that they can actually build the treasury both in terms of dollars as well as the native tokens. So if they are rightly equipped with some unlocked tokens at some irrational price action on the upside, they can make sure that they can take advantage and then ensure that there is some extra delta dollars available. Again, this is purely from the project side, and obviously when we think from the investor perspective, yes, founder token needs to be unlocked, emission schedule needs to be something sane. It cannot be insane. You are emitting 3% supply a month would not be something that you would want to go and invest in.
Because price sensitivity is the key here, right? And I suppose at NodeGate, in some of the deals that you look at, I know you do deep analysis. How often do you see lockups come into your deals, or is this something that's expected on the investor side?
No, to be honest, not that much. But not to complete what you said previously about some benefits from the investment side and lockup investment. From my personal perspective, what I like about blockchain technology, and especially in DeFi, that DeFi create always a new way to create incentive to an investor or a player in this space. So, for example, I can mention staking rewards. So for a crypto native investor, it's very attractive way to invest and generate even more token and revenue with such a mechanism. And at the same time, you contribute to the network security. And then after Node, you have the restaking as well, so a new innovation. So in DeFi space is fascinating, because every time there's a new mechanism actually to make the investment even more appealing to new kind of investors. So I would say that that's great.
So the audience allows. I'd like to do one more question before we give questions to the audience, because I see the ticker is going and we're standing between everyone and lunch, so I can hear the tummies rumbling. But let's just wrap up with one more question. I'd like to talk about real deals, because there's sometimes lots of trading going on, but that's very speculative. And I think investors really want to, invest into something that's got some meat on the bone. From a Verda Ventures perspective, what's most important for you in terms of real deals?
Yeah, so we want to make sure, firstly, that the product or service is solving a core pain point for somebody, and that people are willing to pay for that in what we call like a sustainable business model, something that is currently or will eventually be profitable with strong unit economics. So that's kind of what we're looking for, and making sure that it's the team that can execute on it.
Great. And Abdul, I know from Zignaly, we've had the conversations, and there's a lot of clear needs around having that competitive advantage. What do you see that is striking for a real deal for you?
Well, as Zignaly, it's exactly the same. It has to be a real business. We do not want to, invest into something that is just a fade kind of a thing. We basically invest in this stuff where there is a real business model, just like our own. And we want to make sure that there's a revenue generation behind. The team is not burning crazy. Docs teams are also very, very important. We are docs ourselves, and we want others to be docs. Like, you can do a small play here and there, but for the larger investment, doxing is I believe, pretty important in the industry now. And one more thing that we look for is repeat founders. People think that if someone doing the second project or third project is not consistent enough, but I think if someone has delivered a couple of good projects in the industry, or even in the Web2 space, them knowing what mistakes not to make is also very important. So founders profile is also very, very important. So yeah, these are the few things that are very important from investment perspective.
And lastly, Brendan, from a NodeGate perspective, you see lots of projects floating across your desk looking for money. Would you say most of them are real deals, or?
Yeah. So actually, what I can say, real deals. I have like 4 criteria in mind. So the first one is utility. Does this project add value and can resolve a real world problem?
Yeah.
So what's the utility, and if a user will pay for this service, because still it's a business, right? So you have to generate revenue, and some of crypto founders sometimes they forgot about that. And then the second one, it's about security as well, and because everything is through smart contracts. So it's when it's come to transaction, deals, and money, it's capital to have an audit, about smart contracts. And then after is scalability over time of the project. And the last one is about user experience for mass adoption, obviously, because if to make your platform appealing, you need to make this in the simple way, like for example Revolut.
Yeah.
And they make a great job actually.
Yeah.
to make accessible to every retail investor to invest in cryptocurrency in 2 clicks, So it's very important as well in this mind. So that's what I consider the most important criteria, real deals.
Great. Thank you, Brendan. Now for the audience. One thing we didn't talk about was the importance of regulation. That is a topic that's covered already this morning. We know more regulation means more liquidity. As bigger investors feel more comfortable because the guidelines, the rules of the road are better understood, and they know their A to Zs and not go down a dark path. So we didn't talk about that much, but I'm sure you'll be hearing a lot about regulation in the other panels. But I would like to turn to the audience and for a couple of questions. Is there, Andy? I think there's a mic.
Great panel. Andy from Witt. I got a question. In 2017, during the ICO hype, we've seen a huge amount of money flowing into the industry. Some of these investments have, in arrears, been considered tokenized securities, equity investments. In the meantime, a lot of jurisdictions have started regulating tokenized securities. There are some early secondary markets, but there is literally no liquidity. I assume that investor interest is still mainly into equity type investments and tokens. But if those are not liquid and not tradable today, what are you actually investing in? So maybe my question to you, Alex, what type of tokens are you and your fund looking at today? And the second part is, how do you see the future of liquid investments into actual securities?
Yeah, so I mean, at the end of the day, there needs to be value accrual to the token. As I mentioned earlier, you've got the speculative component, but for long-term kind of sustainability, that will take a project from 2017 speculation into continued sustainability. There needs to be a direct value accrual mechanism where the product or service creates that long-term value. If it's a blockchain, what you're effectively selling, you're in the business of selling block space. So, for example, with Ethereum, people are paying gas fees for a slot in a block. And then through EIP 1559, which is just a burning mechanism, those tokens are used to buy back. So for example, Ethereum is now deflationary. And it was almost equivalent to like a stock buyback in the traditional world. So in the case of, for example, Ethereum, like if you're a staker, you're also getting a yield. So if you're staking and holding Ethereum, you're benefiting from the sales of block space in that it's bought back like a stock buyback, in the traditional world. And at the same time, you're getting this yield, which is almost like receiving a dividend payment. So there are other examples of this, but, in the case of Ethereum, we're seeing a clear demand for the product, block space, and we're seeing a clear mechanism to accrete additional value. So that would be an example of something to me that is a legitimate, interesting use case with clear value tokenomics. And then you had a second question on securities, sorry.
Yeah, so right now tokenized securities aren't really liquid. How do you see that evolving? Because I'm guessing there is interest.
Oh yeah. So I've like, as a personal angel investor, invested in a couple projects that are trying to bring, for example, like tokenized NASDAQ stocks, like an Apple or Tesla, to people who wouldn't normally have access to a U.S. stock exchange, but doing it in a regulated way in the local market. So I think like creating liquid markets, it does take a little bit of time, and it does require a regulatory land backdrop, a regulated, clear regulation for people to feel comfortable buying and selling. And I think we're just in the early innings of, tokenization of real world assets. I know a lot of people hate that term. You could call it securitization, real world assets, whatever you want to call them. But ultimately, like, if there's an underlying asset that has value and the token can enhance access and liquidity to that underlying valuable asset, we're going to see strong liquidity in the longer term.
Any other questions for my fabulous panel of experienced partners? Yes.
Yes, hello. I'm Karsten, founder in the game space since 25 years, since 3 years now with Web3, optional for Web2 players, called Elite Games. I would like to go back to your last question, Katie. We had a half sentence, or at least, on the possibility that it's still okay to be not doxed. Could you, whoever, Abdul said it, maybe give 2 more sentences? Is that a no-go still? I mean, I prefer docs, but I'm sometimes being looked at, you're so stupid, you can't be decentral in the real. So is there still a use case? Which one for?
You mean lockups?
No, for founders
Doxing.
which are not doxed, which are just hiding behind whatever meme PFPs and stuff.
Yeah, I personally believe that doxing is better, especially for the more seasoned projects. I'm not talking about meme coins. Meme coins are a different beast. Let's parked them for a while. But I think all the major protocols and major projects that we talk about around us, as a center figure around it, you need that leader around the narrative, around the project. We don't know who is Satoshi, but we know there was one leader, right? But other than that, if you look at Ethereum or any other larger protocol, game, exchanges, I think there is a lot of merit in having a leader around it. Again, this is my personal preference. I don't think that there is a definite answer around it. There's a whole world of investors out there and a whole lot of world of partners out there who are okay with the team not being doxxed. My personal recommendation and my personal preference, and me being as a founder, I think being doxxed, and then because then there will be tough times, and in those tough times you will have to stand with your community, and you are personally accountable for what you do. And I think this brings a different level of conviction to the founder as well. If you are a public figure, if you're known to people, they can trust you. They know that you are really there and you will not run away.
Good answer for you.
Yeah, I understand. So if you're looking for a real thing, not a meme, so there maybe is no necessity for decentralization purposes in order to avoid to become a security, stay secret. I get that.
Yeah,
clear now.
that's an excuse in many cases. Like, I think you have a lot of foundations around who have become really big foundations, and they started as centralized project, became decentralized, became foundations. But you can absolutely pinpoint that who these guys were, who are the people who started. And for example, Injective, you can actually say that who started Injective, right? You know that it's become a foundation, but you know who started. And there are a lot of other examples like that.
Great. So on that note, I think unless there's another burning question, I think our panelists are going to be here. Please feel free to reach out. Abdul's a little bit far away to reach right now, but you can check him out on the Zignaly's the webpage. I'd like to also thank Brendan, who came last minute from NodeGate, and all the way from Canada came today Alex Witt from Verda Ventures. So thank you very much to the audience and for my fantastic panel. A hand for everyone.